If you did watch yesterday's episode, give yourself a huge thumbs up and a pat on the back, because what we were talking about yesterday was the fact that we looked like we had some divergence forming here, but it didn't necessarily confirm, but it did look like it formed. But there was something that I told you that I've done in my previous trading history that can save you from getting burnt by this big move. And that one simple rule was we do not short a stock when we get a green impression on the histogram on a daily chart. As you can see, we got that buy signal. That's why we're talking about the SPY. This actually happened on NVIDIA and the Qs just on different days in the past like 3 days. So you can look back and see that every time we get that green impression on the histogram, there might have been some fake out to the downside, but you do not want to fight against this momentum. And that's why yesterday we were saying, do not short in these areas, because we could be seeing a fake out of those divergences telling us that price wants to come down, but easily we can gap up and start to go higher. And that's exactly what happened. So give yourself a thumbs up, give yourself a big pat on the back if you like that information. We held above that 20-day moving average and we started to go up. And then where did we find some trouble? We found those sellers right at that weekly expected move, the top of our weekly expected move, these purple lines in between here. And we find that there are going to be sellers within this gap resistance. So it makes total sense for us to want to kind of, see some sellers jump back in. Overall, what I'm kind of paying attention to possibly happening is maybe this is some kind of big cup. And then now over the next day or so, maybe we get some kind of handle to push us to higher levels. That would be my bullish case. The bearish case, I'm overall paying attention to that data. I do believe there might be some slight pullback tomorrow, but I want to pay attention to the data, the PPI, the CPI, and the FOMC minutes, all of those things. It looks like CPI and PPI are expected to come in lower. So if they do end up coming in at expectation, we could see a big pop in the market. If they do not and they come in higher, we could see some major downside in the market. We see another example of that do not short when there is a green impression on the histogram on the daily. Okay, we see that green impression down here, and this is what we talked about yesterday. The Qs actually did gap lower, but thankfully, if you did watch my video from 2 days ago, we talked about this, and overall, we just said that once that does cross, the very high majority of the time, the momentum will continue to the upside, and we can see that happen today. So I really hope that you guys found that information helpful and kind of utilized it so that you weren't caught by these green bars and trying to go short when there is a crossing on the MACD down here. Do not beat yourself up if you were caught off guard by this big bounce that happened today and you thought this thing needed to come down, because, the charts were telling you that. They were saying there's a divergence on the 15-minute, very significant here. But the thing is on this one, and it will cross some of the time, but the MACD did not give you that confirmation of a cross, okay? So we want to wait for that confirmation for more downside. Hopefully you did catch on to my video last night. That way, when this thing started to move up, you kind of closed out of your positions, or maybe you had a tight stop in here or something like that. That would be very good. I would just say don't beat yourself up, but now you know, write it in your notes if there's a daily crossing on the MACD. Even if I do see weakness, maybe I'm not going to take shorts that day and I'm going to wait for more structure. We could see a bit of a bigger pullback, which wouldn't be the worst thing before some news. But overall, we could see a quick, rapid touch of this before that news. We could even see this break. And if that happens, I'm going to be a little weary of the data. But overall, your bullish case here is I do think you want some kind of slight pullback, and then you can finally maybe see this continuation triangle break to the upside. As far as the bear case goes, I think you are going to see some kind of downside in the morning, but we could just rip back up, okay? So don't get too bearish too quick. I think for the bears, you really just want to be paying attention to that data. If we do end up being down towards these levels, soon, you just want to wait for that actual triangle to break on the daily chart. Before we get into the stocks, I just wanted to share with you guys that I am going to be a first-time dad. Yeah, come February, I'm going to be having my daughter. It's going to be a little girl, and I'm very excited. And a lot of people think I'm like 23 or something, but I'm actually 31, and I've been doing this for a little while now. But I do know babies are expensive, and they take up a lot of time, and that's something that these videos take up a lot of mine. It takes up a lot of my time. So if you guys would like to continue seeing these videos daily in the future, please just think about supporting the channel as we go along. In the description, I have left a little PayPal link. If you can donate any amount you want. If you found something helpful one day, if you have a good trade, just think of your boy Lucas over here who's having his first daughter, and maybe we can turn her into a little trader or something when she's born, okay? Let's get back into the stocks. So thank you guys. I am excited and I really appreciate you guys watching these videos. Okay, but let's talk about Apple here. Apple actually did have that divergence, and you can see actually today we did set up a little triple divergence on the RSI, and we actually have broken to the downside. So even though the SPY and the overall Qs were going up and up, we see by the end of the day that Apple actually closed negative. It closed in the red, and maybe, just maybe, we can look at this 2 hour and see that we're pretty overextended. We did hit those overbought territories, and it looks like we may be due for some kind of pullback. I don't know how deep that pullback would be. I'm assuming it'll just maybe come down and get to this, 50 on a 2 hour or something like that. Mainly just the middle of this purple zone, and then we can see what happens around that FOMC minutes or the CPI on Thursday. It is important to the bear side to note that we did get rejection from that 50-day moving average on the daily on Apple right now. So maybe the same standard we will set as we set earlier was if we do see a clean break, and the 200s getting so close to this purple zone that we probably should more likely be saying if we do get a full closing, red bar below the 200, that's when you can really put your bear hats on. A lot of the time, what we do like to see is, we talked about a double dip in Apple when all this was happening. So we could maybe get some kind of double dip back down to just exactly test that 200 before we start to see more upside. Overall, we just need to be tactical. We need to be paying attention to price. Right now, we are looking overextended, so it makes sense for us to get some kind of pullback. Let's pay attention to that PPI for tomorrow. Oh, Tesla, we broke out of that little triangle. Good thing we mentioned that in yesterday's video, right? But Tesla is seeing some strength here. And as we get to closer and closer to the top of this triangle, we're going to see, a little fight between the bulls and the bears to see who's going to win. So right now we are sitting almost in the middle of this triangle. We're a little bit higher, but still we're pretty much in the middle of it as of right now. And we could just, we could see this go either way. We could see strength into tomorrow, and then possibly we come to the bottom, and then we have to kind of see from there. But we could also see a drop tomorrow and then strength, and maybe we break to the top. So I think the overall thing that I will say on Tesla is, I'm waiting personally for these to break. I'm looking for the top side to break or the bottom side to break. And I think maybe that information that we get, especially with the CPI on Thursday, can give us that direction. All right, but we got to give you guys a thumbs up on Tesla. Okay, yesterday we were talking about how Tesla was starting to coil up here, and maybe it was just going to continue, but we said, hey, let's be good traders here and let's wait for a break to the upside or wait for a break to the downside. So congratulations if you did see that little break and started to take this trade and made a little bit of money today. Now we are seeing that fade off at the end of the day, but overall, this is a pretty gradual selling. This could be people taking profit or something like that. And you see that we aren't necessarily breaking below these levels right in here. So we are going to test these highs one more time, and maybe we can use that as leverage to go higher. If that PPI does come out a little bit poor tomorrow, this could be a slight hipfire move to say that this might have been a fake out for a day, and now we're going to go to the downside. I don't really see that playing out. I overall think Tesla will remain in these types of areas before the FOMC minutes and before the CPI release. See, and Amazon faked me out. I really thought we needed a little bit more of a drop before we go up here, but hey, we went up there and we kind of got our little touch of that neckline. Okay, so the thing I'm trying to figure out right now is I have a left, I have a head, and I have possibly a right shoulder, but I'm like, is all of this the right shoulder, or have we even formed the right shoulder yet? Because we did come up into that neckline. If we do start to pull back, maybe actually all the way over here, that this was just wonky, price action, and maybe this is actually our right shoulder, and then we can start to extend to the upside. It's just something I'm paying attention to. That PPI is going to be very important for stocks tomorrow, so pay attention to those numbers. It's supposed to come in pretty low, so if it does come in hot, it's going to be bad news. But overall, we still have FOMC minutes in the CPI, and I think people will wait for that data to make distinctive decisions. So still, we just pay attention to this low on Amazon. If we do break below that on a daily basis, then open up the floodgates. We might be heading to that 200, but if we do see some kind of pullback tomorrow and then get some confirmation here to the upside, that would be very nice to the bull side for Amazon. Something pretty cool about NVIDIA right now is you are seeing a bunch of bars closing above the 50, right? I think that's 3 days in a row closing above the 50. That's pretty dang good. Now that is good news, but the only problem with that is as I go into a shorter time frame, like a 1 hour here, we can see that we kind of have divergences everywhere at this point. You have a triple divergence on the MACD. You have a triple divergence on the RSI. If you want me to line those up real quick, it's just you can kind of see it here. It's just boom down to here, and we got it boom down to here. So that's between these highs here. So we could see a little bit more selling in Nvidia in the near future, but overall it is still going to depend on that CPI data and the FOMC minutes. So it's kind of like whatever stocks do before FOMC or even before the CPI, we still want to be open to the risk of CPI flipping everything on its head. Okay, whatever happens before the CPI can be 100% changed after the CPI is released. The main question that you're going to be asking yourself on Nvidia, though, is this going to maybe, is it going to just trickle up higher into that information? I don't see that as being a good thing for Nvidia. I believe you do want to see, kind of like here, we got that little pullback, we go higher. I would like to see more, a little bit deeper pullbacks, or at least more consolidation, but we keep getting these rapid moves. So we have to decide, is this going to come down now with that break of that, rising wedge, and then create that right shoulder and it's all over with the break of our bottom of our neckline here? Or is this just going to be a pullback? And that's something that I think the CPI will help us understand. I do believe we need some kind of pullback, and then maybe the CPI will be able to tell us, is this going to set up a higher low to extend us higher, or is this going to continue to sell off to give us that right shoulder? And that's overall what you want to be paying attention to, and why I highly suggest you do not place any big trades before that CPI, because nobody knows that information. I'm not a mind reader, and neither are you, so we shouldn't try to guess. You can estimate, you can do risk to reward type trades on days like that, but I personally stay out of those types of days until the actual data comes out and I see the market reaction. The only thing I wanted to say about yields here was this thing can turn up pretty quickly. It looks like it wants to come to the downside. We're almost getting that cross on the daily to the downside on the MACD, but we haven't got that cross yet. So this easily could fake us out and go one more time higher. I still am leaning towards this starting to pull back down, but the only thing I'm worried about in the process is every single time I look at the 2-year and I look at the 10-year, I see those numbers are getting closer and closer together. And when those numbers start to invert, aka the 10-year is actually more than the 2-year, that is going to signal in for recession. Best part for the bulls is that the VIX actually closed below the 200. We still had some, buying back up at the end of the, or actually a sell-off towards the end of the day. So you did see the VIX start to get back above that 20 maybe. But the overall big thing I'm paying attention to is we did get that red bar on the histogram on the MACD on a daily chart. So we could see further upside. It doesn't mean that we can't still go to higher levels from here. It's just saying that the probability is that we are going higher. The problem with seeing this sign today is we do have a data release tomorrow, right? We have the PPI and we have FOMC minutes, and then we have CPI on Thursday. So even though all this stuff is looking great for the bulls right now, we have to pay attention, because what did I say about that data yesterday? One piece of data can take past 2 to 3 days move and flip it 100% on its head. So we want to be paying attention to that. Overall, just look for the VIX actually closing below the 50. I think once we actually close below the 50 and start pulling down to go fill, this on a closing basis and this gap down here, I think that's when we can actually get really bullish on stocks. All right, so the main takeaway from this video is that I'm going to be a dad. No, I'm just kidding. The main takeaway from this video is that even though we are seeing some bullishness, we look like we have some stocks that might need a pullback going into tomorrow. But we do have PPI, and PPI could get us even more overextended. Who knows? We have PPI and FOMC minutes tomorrow, so let's really pay attention to that data, and then the CPI on Thursday. I overall think that the CPI is going to be the most important piece of data this week, so let's really pay attention to that data. And like I said, it doesn't matter where price is at that time. That little piece of data with the CPI can flip everything on its head. So let's be really aware and look out for my video tomorrow night, okay? Have a good night. I hope you guys have all the luck in the world trading tomorrow. Peace.